at the settings you need. So for the fib, it's just your standard deviations on both the negative and positive side. So if you take a look at the settings, I'll take a screenshot of this and I'll send it over to the chat if you want to watch, if you want to use it for yourself. And then here is the TIME-FIB settings. So it looks like this. The settings are pretty simple, but I have the dotted lines for the -1 to -1.5, so that's your entry time frame. -2 to -2.5 is your terminus, and then -4 I just have as yellow, so I'll screenshot this as well if you want to use that. Post that up here. So basically the understanding of how to use the TIME-FIB is you're going to apply it for breakers, and specifically for market maker models it works best. But you apply it to a breaker in price, typically at the top or at the bottom of the entire market maker model, and you can apply it. You'll get a entry time frame and then a predicted time frame where the market maker model is either expected to end or we see a liquidity sweep, something like that. So I'll try and find the example we got from today so we can clear all this out. Now, the breaker formation is one of the things we'll go over, but just to show a quick example, we have our breaker in here, high, low, higher, high. You drag from your highest point to the breaker low. And you can see, I think we swept out, where's the liquidity before? You get an entry time frame, and then this red area is expected where the low is supposed to form, which, 2 candles outside is pretty good. And then if that doesn't form there, you have your -4 standard deviation. Now applying that, so the way you want to use it is if we have a bearish breaker, so we have a high, low, higher, high, you'll take your fib from this point to this point. So if you look at this as a A, B, and C leg, you have your 1, your 2, and your 3. So your 1 to 2 will always be your price fib. So you drop your fib from wherever the high formed all the way to the low, and that's where you'll drop it on. And then typically if you're looking at a bearish breaker, you want your -2, -2.5. And then your 2 to 3 leg, which is this low to the high that sweeps out liquidity, is where you drag your TIME-FIB. So you take, I go backwards. So you take your highest point where the smart money reversal is, and then you drag it all the way down to the low. And then it should give you your -1, sorry, your 1, your 0, your -1, -1.5, all the way to -4. And then if we have a bullish breaker, it's the same exact thing. Let me see if I can find it. So here's one right here. We have a low, high, lower, low before the smart money reversal here. So this is your 1, 2, 3. So you take your price fib, drag it right there. Then you take your TIME-FIB. So this is your 1 to 2 leg. TIME-FIB between the bottom and then where you started the top of the breaker. So right in there. And this actually is a very clean example. So your entry, obviously if you're looking at going long and you have a bullish breaker, you'll have an entry that forms that either taps into an order block or taps into a fair value gap that forms between your 0 and -1. So let me actually, can I expand this paint? There we go. So between your 0 and -1, typically you won't find any high probability setups. Obviously if it's a larger breaker, you'll see a couple low risk entries, something like that. But you want to wait for your -1. You can see right here we tap into a bullish breaker. Sorry, not a bullish breaker, a bullish order block. So we have a breaker in here, we have a down closing range, we validate it by this up closing candle and close above this inversion gap here. Trade back lower, tapping into the bullish order block, and then right here at -1, you can go long. Now you're going to be targeting typically where the liquidity is. Obviously is your first target just from market structure standpoint. So this is your swing high up here, relatively equal. So we got buy side liquidity up here. So other than your liquidity objective, on any time frame. It could be specific to the time frame you're trading on or just a higher time frame liquidity objective. But besides that, this 2 to negative 2.5 price deviation is typically where you kind of want to aim for. So right in here, I'll shade it in orange, is typically where you want to be looking for price to retrace into. And then if it goes past the 2.5 with speed, then you've been looking for -4. Okay, so you kind of want to skip 3 and 3.5. Obviously, there'll be scenarios where it'll stop there, but for just simplicity purposes, here is the main levels. So -2, -2.5, that range, and then -4. So going back to this example, you have your entry here. You could go long right off that. Just off this candle, really, because you already saw perspective, the order block starts trading back up. You also could go along with this candle as we tap into the bullish breaker right here, right? So this is your low, high, lower, low. This last up close candle before the move lower is your bullish breaker. So you could enter, even here, you can enter. We see a tiny gap fill, I think. Maybe not. What's the low on this? Same low. So anywhere within this range. You can start at the -1 and even start at the -1.5, or just be anywhere in between that range. But as soon as -1 hits -1.5, that's kind of that time window you want to be aiming for. So entering long there, and then you're going to be targeting up here. Now between -1.5 and 2, you'll see that expansion leg as we reach into the price target. And you can see in this example, your -2 and -2.5 line up with your -2 and -2.5 here. And right as we get into that time window, right at 11:50, you can see we pierce right into the -2, right, and start trading back lower. So one thing to note is when we see the -2 to -2.5, there's a couple things that can happen. We either see a liquidity objective hit, which that'll basically complete your market maker model, and sometimes that can be before your -2 price deviation, or you'll see an attack into that standard deviation level, or you'll see on an objective hit, liquidity objective or imbalance, something like that, we start to retrace, and then between -2.5 and 4, you see consolidation, or you see continued expansion towards the untapped liquidity. So in this case, we got our entry point, go along here, right out this order block, right? And then you could be targeting, anywhere that seems reasonable. You could take it off at 20 points. You could maybe get this gap fill, the 2 up to, we'll go all the way up to the swing high here. So good 42 points you can see delivered. Now this is very, very useful if you're trying to pair it with macros. So if you see this entry time frame line up with the macro times, it becomes very strong, especially if the breaker is clean. But I like to use this mostly in the AM session. So if you get an entry here where it's slightly before the macro, that's also fine, but I suggest, you backtest it yourself and see what works for you. But going back to this, we see the price deviation hit here between the -2 and -2.5. So this -4 doesn't really interest me anymore. We got entry, exit, all within the time that we we're expecting. So this -4 to me just kind of seems irrelevant once we get that. And I'll show you further examples where that same exact logic applies. But that's kind of the framework. It's not terribly complicated. It's just basically estimating times. Obviously, there'll be times where it's a minute or two off from the windows that form. Now, another thing I want to point out is how do you identify the breakers? So typically, if it's on the 1 minute, you'll see a clear high, low, higher high, or a low, high, lower, low. Obviously, you're going to be looking at a sweep of liquidity at some point, even if it's just an internal range liquidity objective. The higher time frame liquidity objectives, you can sweep that out. That's kind of your best breaker. Obviously, there'll be kind of small breakers like this, where it's just sweeping out internal range liquidity and then starting to reverse. So there'll be times where you can't spot the breaker quick enough and you just get quick price runs like this and you don't really see an entry. But it's most commonly your last consecutive order block range before the move that takes out liquidity. So we have, in here it's just the low. If we switch to a higher time frame and go and look at this again, so you see a little bit clearer on the 5-minute, right? High, low, higher, high. So you list last down closing range. You could use this entire candle body or the entire wick, something like that. And then the smart money reversal, there's a couple ways you can spot the smart money reversal. You have one would be an inversion gap that forms very, very close to the top end. So here you can see we have a bisi right before this high point is formed. So you see the bisi, you want to come down and see it respected, right? But instead we close all the way through it with one candle. So that forms a BPR, but more importantly, it forms an inversion gap. So if you see this inversion gap near the reversal point or BPR, that's a very, very strong indication that price wants to reverse. Now you can see it over here. On the lower time frames in the 1 minute, this down closing range and then this up closing range quickly kind of nullifying it. That would be another BPR you probably see. And this up closing range here, I show you on the 3 minute, it looks very similar to that same exact thing. Right here, right? We have an up closing range and then instantly down close. You can't see the BPR or the inversion gap on this, but if you drop to the lower time frames, it's clearly there. So inversion gaps, BPRs, near smart money reversals, that's one thing. Obviously another thing would be your breaker formation. So we have an invalidated order block that you're looking to be respected. So in this case, we have a down closing range. These two down closing candles traded up through, validated. So you want to see that used as a bullish order block, right? And we also have fair value gap on top of it. So two PD arrays that you want to see support price, we invalidate both of them, and you want to use that as inversion now. So breaker blocks are just inversion order blocks, just near the top or the bottom of smart money reversal ranges. So this range in here becomes your breaker. I use the candle bodies, drag that out. You can see the nice respect of all those candle bodies staying below it, wicking up into it, and then we sell off into the relative equal lows down here. So you could also drag your price fib and your time fib on here, and you see smaller entry points, right? So if we drag this, definitely hard to see. So you kind of have to play around with it. Like this is such a small breaker where you have two candles where there's really not clear entry point or a terminus. But even here you can kind of see, right, we have a gap fill right there at negative 1.5, and then it displaces and creates the low right there before turning back up, which that alone I think maybe 10 points or something like that. Yeah, good 16 points just off that tiny breaker range. Another way you can identify the smart money reversal is with intermediate term highs and lows. So if we form a fair value gap and price comes and dips into it and then we trade away, that becomes an intermediate term low. Same thing with a gap like this here. We have a sibi, we fill it, and then we leave. So that becomes an intermediate term high. What do we see? We see a breakthrough closing above the high end, and then that confirms a smart money reversal. So this is your 2022 market structure shift, if people are familiar with that. So intermediate term high, breaker formation, and your inversion slash BPR at the top or the bottom of the range. Those are very, very strong indications that price wants to properly reverse. And you can pair that with, once you spot the reversal, you can easily spot the breaker that forms before that. So we'll get into some examples now and look at each of the different variations and how you can apply them. Give me a sec, So these are just the rules I kind of went over, so if you want you can screenshot this or just go back and review it. Basically, I covered it all, but I'll start looking at some examples. So here's your first example where you have a breaker here. We don't see a full sweep of the low. I'm assuming there's probably some SMT divergence there with NQ. Don't have the chart to compare it to, but clear order block range, right? We have a high, low, low, high, lower low that sweeps out these relative equal lows right here. You can see the low that's formed. So still taking internal range liquidity out. So it validates it as an order block. Now, once you saw that swing high here taken out, so market structure shift, you could see, okay, that's a nice reversal point. Obviously, there's a gap here, not a gap, order block. We see invalidated, traded all the way through. So different ways you could identify that as a smart money reversal. But you take your A to B leg, you drop your price fib over there. So you're looking from -2, -2.5. It's that target range. And then from your B to C leg, so from the high of the breaker to the low of the smart money reversal, you drop your time fib. So you can see the entry in here. We have order block taps right there off this order block. So you could use that as an entry point. You could use just the breaker, trading into the breaker. You could use that as an entry point, or the order block. Different ways you could enter. And then you see expansion up past the -1.5 to the 2. We trade right into the -2. Sorry, the 2 standard deviations with a price with the -2 time deviation. Start chopping around there, and then you can see we start bumping up against that -2.5 price deviation, and then at -4, you kind of see that high form, and then we start trading back lower. So obviously it won't be completely precise all the time. You have these kind of gyrations right outside, but for the most part it's pretty accurate, right? Like this high being formed right at the 2 standard deviations is only a couple candles off the estimated time that we're looking at. So here's a bearish example. We have our breaker here, right? So it's a clear order block range before the move up. We start trading back lower. So you see we have an inversion fair value gap that forms near the top, right? We trade back through it with speed. And we also take out the swing low. So that all validates the smart money reversal in the breaker at the top. So you take your price fib, you drop down there, looking for -2, -2.5, and then you drop your your time fib from the top to the bottom. So right here we get starts climbing up. We get our entry. You could use the breaker as your entry point, or this order block. Obviously stop probably above this breakaway gap, something like that. Start trading back lower. You could also use this up closing candle once we close below it. That's a validated order block. Trade up into it there. Could enter short. Now we're looking for the 2 to -2.5 as our first target. So we trade back lower. You can see right outside this red time window, we get into the price deviation as expected. And then between -2.5 and 4, we run out the liquidity objective that's within discount of this entire dealing range. Okay. Now obviously we trade back lower, probably taking out this low right there. So another example where it basically lines up almost perfectly. Here's an example where we have a bullish breaker. This one's a little more difficult. It's also during lunch hour. So you'll see the lack of precision during lunch. But clear breaker, we sweep out this low and start trading back up. You can see the inversion gap forming there near the low end. Trade all the way through it. You have your entry time frame. We do fill this fair value gap, but then we kind of trade back lower. We don't take out the low. So that's one thing to mention. Fair value gap here. So if you had your limit order at the top end, looking to go long, targeting this liquidity up here, which also is decently close to the 2 to -2.5. Your stop would be below the fair value gap low. So limit order there, stop below this low, drag that out. So you can see price between the -2 and -2.5 time deviation, we don't see really any acceleration upwards. Instead, we just tap into this bullish order block down here and discount. But we don't take out the stop. We continue up, then in between -2.5 and -4, you see this nice expansion up all the way to basically the high forming 1 minute off. You can see we take out liquidity, which could be your exit, and we also dip right into the 2 to 2.5 range as expected, right at -4. So another example where you know, it's not super precise because we're in lunch hour, but it still plays out for the most part. Here's basically the same exact thing, just with the wider breaker. So if you wanted to use this high, this low high and lower low, entry point given with the order block, we expand up and we continue up to the -2 to 2.5 with that same exact deviation. So you can see it, it still plays out if you draw your breakers differently. If you wanted to draw it here, you have this kind of smaller one, right? And this is your -4 running up into that same exact price deviation. And then here, if you want to draw your breaker a little bit wider, still get an entry point, still get an exit right around the -2, -2.5, and then you still get your expected deviation right at -4. We got 1 minute outside of it, tapping right into that range. Here's an example with the AM session. So we have our breaker, we have sell-side liquidity down here. This one's kind of difficult to see, but you can see the low form, kind of some consolidation in here, and then the lower low. So low, high, lower, low. That's where you drag your price fib from the 1 to 2, and then from the 2 to 3, you have your time. So you're looking for the 2 to 2.5. You get your entry. So price kind of just starts spiraling up. We get entry points, you know, between the 0 and the -1, but we do also get an entry here. We dip right into the fair value gap right here, as well as the wick premium end of that order block. We're also trading within the breaker right in here. So you get an entry between the time allotment, and we start trading back up. We don't see the liquidity objective or the price deviation met between -2 to -2.5. So you're expecting some sort of price reaction around -4. So you could still hold it. You could take it off at the buy side there, which is 2 minutes after the -2.5, which is still pretty good, I think. And then we reach up into the -2, and then right at -4, right around it, a couple minutes before, you see that dig right up into that area. Another example here, definitely a wider breaker, but I use this low, high, lower low. It's kind of difficult to see with how dark these lines are, but another entry given between the purple lines here. You have a bisi as well as the breaker. Another breaker formation right in here. So we have this breaker that we're using, but another breaker that you could also use as confluence for your entry. But bisi, enter there. You can see a nice expansion up, basically taking out the buy side liquidity between the -2 and -2.5, and then we expand with the -4 up into, we trade lower than expected, but you can see right after the -4 continue to slowly high resistance liquidity around signature all the way up to the -2 price deviation. So it's a little bit off with this one. Definitely it's the PM session, so not as probably clean or high probability as the AM session, but you can still see the concept play out. Another example here, this is during the London session. You have a breaker formation sweeping out the buy side up here, and I think maybe up here too. Clear breaker, price, time, same exact stuff, you know. Entry point given with the fair value gap, displaced lower, filling the entire new day opening gap. Lastly, also the sell side right here, right around the -2, -2.5 time, also digging into the expected price deviation. Right, so if you kind of just drag this line out right there, and then the low also forms perfectly at -4, sweeping out the internal range liquidity right there. Right at 9 a.m., then you get that reversal up. So that would be a nice, if you entered here, we'll say 14,950 all the way down to 14,830. So a good 120 points or so. Obviously, you probably won't hold it to the -4, but if you don't see the target met between -2 and -2.5, you'll see -4 either reach for liquidity objectives or reach for the price deviation that hasn't been met yet. But this is probably an example where hindsight is clearer than the actual trading itself. I would say this, for me, would be probably where I would exit. So enter here, we dip into internal range liquidity, and the price deviation. So I'd probably be fully out there and then just let it play out for the rest of the morning. Another example, this was just on demo. We have a breaker formation entered right at the fair value gap fill, right at the negative 1.5. So again, you can use these lines, even if it's at -1 and at negative 1.5, you can use those as entries. It doesn't have to be in between. You can use those exact lines as entry points. But entered long there, got a little bit of heat, and then we expanded up into a little bit further than expected, but still held, looking for the buy side liquidity as well as the -4 standard deviation. So this is where an example where we already expanded with the first leg, basically before the entry was even given to the 2 to 2.5. So in this case, we have buy side liquidity still, and we have a -4, or actually it's just regular 4, but we have a 4 standard deviations of price above that liquidity objective. So this is an example where, if it passes through here, you're looking for that next objective, which would be 4. So you entered here, and then I exited, I think right at 18, right at the 4, or maybe it was right at this buy side liquidity. Nonetheless, the price didn't really align with the time as much. You can see the -2, -2.5, and even the 4 doesn't really give too much precision. You see the high formed right there in between the time, but the entry was the most important part. Typically, that is the most important part, especially if you're just looking for 20 points or just your liquidity objectives. That entry time frame is the most important, and then anything that is precise in between those other time segments is more or less just kind of an extra stuff. Another example here, low formed. This is definitely a rough example, but also within multiple sessions, and we're on the 5-minute. So this tends to work best on sub 5-minute charts. I would say the 3-minute, 2-minute, 1-minute works best on. Most of these screenshots are all on the 1-minute or the 5-minute if you're looking at multiple sessions. So this is London into New York, things like that. But I've seen it work mostly on the 1 to 5. I don't know about 15 hourly, anything like that. This is what I've seen work. But you still get an entry point, low form, another low, taking out internal range liquidity, right at -4. Trying to find some good examples. Here's a really large expansion. So we're on the 5-minute. Clear breaker formation. We get an entry here. Could use that for value gap, tipping into that, or even the order block as well. Could see the order block top, so I guess that's outside. We'll use that for value gap as the entry. So clear breaker, we're looking at 2 to -2.5. We get that right in between the estimated time, right? Then you're looking at -4 as the next one. You can see price starts to kind of search and destroy conditions in between or during the AM session of New York. But eventually we do reach it right there, the highest formed, and we smash through that 4 price deviation. So this is kind of a larger one. Probably wouldn't be something I would trade. But you can see the entry time does line up with right at the end of the London kill zone. So London kill zone starts between 2 and 5, and 4:30 is right here. So you can see that probably is right around 5 a.m. in the morning. But yeah, when the time lines up with either macros or specific kill zones, that's where it becomes highest probability. Like here we have an entry, but it's outside of a kill zone. It's also on the 5-minute, so probably something I wouldn't trade, but you can still see it plays out. Breaker formation, entry given at the order block, and then between -2 and -2.5, we do see the buy side liquidity reached, and then we start trading back lower, and you can see the breaker that's forming in here. So that's an example where probably would take something off there and trim stop to either break even or in profit, and then this candle here probably would knock you out. And then you can see the -4. We're basically done with this entire market maker buy model. Another clean example. during the AM session, right around 9 o'clock. Clear breaker. I don't have the price fib dropped on this, just the time, but you can see low to high where we swept out the buy side. Entry given in between the entry time frame, but we do see a little bit of heat, but your stop would be above the high. So we don't get stopped out, we just instead tap into this bearish breaker within premium of the dealing range. Sell off, and then right in between 2.5 and 4, we see that salsa liquidity ran out. Probably reach into, some price deviations in there between -2 and -2.5. You can see the low, the quick expansion from the entry to -2.5 is pretty consistent. This one from November 6th. You have that -2, -2.5, filling the gap in there. Entry given with the bullish order block. And then right at the time, you can see the same exact thing lining up. Now, that's another example where we reach into the price deviation as well as filling this gap. And we have probably a bearish sentiment with this low forming, and we don't take out the London low. So still kind of salsa liquidity draw. Objective met within premium. We're filling the price deviation. So you're not expecting the -4 time deviation to really do much. So really, most stuff will play out between this time frame. So between 0, I guess, and -2.5 is kind of most stuff will happen. There's very, very few examples where price will expand very far, and we see that -4 usage. So this -4 time deviation you really only want to use when this range here isn't meeting any objective, or we're already met, an objective like this. Where's the other one? Like this, where we have already met the objective, and we're looking for a higher objective and this -4. Then that's a case where you would probably see some expansion between then. That's when we just went through. Another very, very nice example. Breaker in here. So high, low, higher, high. This was probably a little bit harder to spot, but if you switch to a higher time frame, like 3-minute chart, probably a clear breaker in there. But 1 minute, clear breaker formation, and then -2, -2.5 is all the way down here. But you can see price expanding past that. But entry given between the estimated range, we have a return back into premium of this dealing range, filling the inversion fair value gap, as well as probably tapping into a 2-minute gap somewhere in here. By using the IFVG, get it to short, and then we're looking for the salsa liquidity over here, and then the -2 to -2.5 price deviation somewhere down there, but you can see the nice expansion at 9:30. We'll just kind of skip through these. If I see anything, I'll try and say something. This is the one from last week. Another example where the -4 is used. This lines up. This is during lunch, so tiny breaker in here. You can see the low, high, lower, low. Entry given. This is probably one where you wouldn't spot it until very close to the actual entry time frame. So I'm probably watching, and then once I saw this candle here close all the way through this gap, basically all the way through it, and then we start trading back lower. Probably not an example where you'd be trading it, especially during lunch hour, but still an example, right? Get the entry, you see your intermediate internal range liquidity smash through in between the -2, -2.5. Still looking for the price deviation. You can see it's hit right at the -4 perfectly, right in between there. Also tapping into the inversion order block in here. Another entry. More or less the same thing. -4 right there in between the price deviation, entry given. You could use this bullish order block, another bullish order block, tiny fair value gap there, so multiple entry points. And we expand, taking out the external range liquidity and -2, -2.5. This also lines up with the PM macro. So that's probably why this screenshot is here. So PM macro definitely wider than the other ones, but you can see the entry point lining up with that, so that becomes very, very high probability. And then basically right at 349-ish, we see that objective met, and then we sell off aggressively. Another example where entry lines up with the 250 macro. So breaker formation, right? Relative equal highs, tapping into some sort of objective. I don't know what this orange box is, but breaker, we get our B to C leg, draw the time fib on that. For value gap right up in here, also lining up with the 250 macro. Get our entry, another trade up, filling this tiny gap, could use that as well. And then we start selling off. Then you see the probably an internal range liquidity sweep, but still a decent amount of points. So if you want to enter 15,395, you're looking at 15,375 as 20 points, still played out. Another large range example. Trying to find the ones from recently. Here's a macro example. So 950 macro breaker. We have an inversion gap at the low end. So another kind of example where that SMR is confirmed. We see the bisi forming right here. We got an entry point during the macro. Start trading up, taking out internal range liquidity between the -2 and -2.5. Still looking for breakaway gap to be filled. So this purple line here is your 2 standard deviations. And then we met it right at the -4. 1 minute off, but still pretty good. An example with the PM session where your entry time lines up with the 150 macro. Nice 2022 model in there as well. Buy side sweep, another buy side sweep, breaker, high, low, higher, high. So that's what that time fib is drawn there. Entry given, sold off, and the salsa liquidity hit between -2 and -2.5. Another example lining up with the 950 macro. This is from yesterday. Here's another example where we line up pretty nice. Breaker, so we sweep out relative equal lows in the London session from probably around 5 a.m. Clear breaker, and we see this kind of V shape, right, where probably on lower time frames you see that inversion gap form. We trade up through it, probably expecting some higher prices after we sweep out something important like that London session low. Trade up. So during macro time, you have our entry point given there. Bullish order block, tapping into that, could use that as your entry. And then we see expansion up, taking out internal range liquidity between this time, and then right at -4 we see the fill of the price deviation from the A to B leg, as well as the buy side liquidity taken out. This is on ES as well, but still a good, let's say 45.21, basically 10 points, pretty solid. This one is from today, I believe. Yep. So another example where this one's probably difficult to see. Definitely kind of subjective here, but we have an order block range before the buy side sweep. So I'm using this high, low, and then the highest high. Definitely a difficult one to spot, but entry given, filling this sibi, right, and tapping into the inversion gap as well, the BPR. Tapping into it, see a little bit of heat there, but stop probably above the high. Another entry point, and we sell off, taking out the salsa liquidity and tapping into the -4. So we already see this run down into the 2 to 2.5 prior to the entry point, so we're expecting a further expansion to 4 standard deviations, as well as this relative equal lows down here. Smash through it, so then once that objective is hit, we're not expecting much out of the -4 here. So basically just done and dusted with that model. So that's all the screenshots I think I've gathered so far. If you have questions, you can post them up now. I think I'll copy this and send it to the backtesting Q&A post. So if you want to look at that. Yeah, it's not terribly difficult to use. It's just kind of the applications of the breakers that's the hardest one. So picking the breakers out and spotting the smart money reversal, obviously before your entry time frame, that's the hardest thing. But play around with it. If it lines up with the macros, decently high probability. If it lines up just within a kill zone, also high probability. I like it the best on the 1 minute. Anything higher than the 1 minute, the entry time frames kind of become further extended, and I don't like sitting through multiple different sessions to get in a trade. But yeah, my favorite ones for sure are the ones that line up with the AM session. PM session, not the highest ones, but yeah, not terrible. I think the more important things to learn is the smart money reversal and breakers. Breakers are subjective, right? So it'll take time to train the eye. Yeah, for the most part, they're subjective. Obviously, there's very clean ones that you can spot. Trying to find an example. Really clean breaker. Like this is pretty clear, right? We have a bisi down here, clear up closing range before the move lower, so you could use that as a breaker. But there's some like other examples where it's wide like this. We have a high, low, higher high that takes the liquidity, and then we start trading back lower. So yeah, it takes time to train the eye. But if you go through all these examples, I'll send the PDF. Actually, no, all the pictures are posted. So yeah, if you take a look at all the pictures posted within the backtesting breaker TIME-FIB Q&A post, there's a bunch of breakers in there. There's also another Q&A post with reversals and price. You could look at the market maker models as well. That should all help. But yeah, I think looking at the 1 minute, just kind of spotting them on the 1 minute, getting used to that, would be very helpful. Obviously, I'm not going to build a model just around this. The tape reading price is more important than applying this, but it's just another tool in the arsenal you can use as just kind of as strength for an entry. Like if you're already favoring market maker model forming, you have a breaker that's clear, and you just want another kind of precise time you think you should enter, then that's kind of where you apply it. So it's specific to MMXM and 2022 models, but when you can apply it right, it's pretty powerful because you can know exactly when you enter, know exactly when to exit, and if it doesn't reach those objectives, then you can start being worried, I guess, of if you want to be stopped out or just close out the trade. So yeah, if you have any more questions, feel free to shoot me a DM or comment them on the YouTube video when this is posted. I'll try and upload it probably by tonight so you can rewatch it if you need. So I'll keep applying these throughout the streams, and I'll try and explain them more, but if you can just stop me anytime during the stream and I'll try and cover it again of why I'm drawing it from, this breaker besides another one, something like that. Q&A session still scheduled for Saturday, so it can be about anything specific that you have or just a model, psychology, anything like that. So I appreciate all you guys tuning in tonight. I know it's kind of a longer stream than probably expected, but hopefully you're able to learn something and answer your questions regarding the time projections. I'll see you guys tomorrow morning, Lord willing, for the good old AM stream. So have a great rest of your night, and I'll see you guys then. Peace.